Everyone, Maurice and welcome to Things Invest, where we talk about investing, finance, and professional development. For today's video is related to purposes only. The stock we'll talk about today will be CCIV, Churchill Capital, or Lucid Motor. So it's been a while since I last covered this stock, and with respect to the EV sector, based on my last video and my technical analysis on both Tesla and NIO, and some of the other EV stocks so far, it seems like the reversal is actually currently happening at the moment. So the recovery is currently in play and definitely showing a lot of bullish signal and notification across the market so far. However, CCIV has been kind of dead in the water so far, right? And as of today, with respect to Tesla and NIO, currently up about 1.7% respectively, Churchill Capital is down about 1% so far. So it's been dead in the water for basically a couple months so far. So what's going on right here, right? So I'm going to go through a technical analysis, take a look at the psychology behind investors. What is the appetite currently going on right now, right? Also give you guys my level resistance that we should be looking out for in case you want to be buying it for the first time, or already if you have a position, start dollar cost averaging going forward, and my price target for year in 2021 as well. So stay tuned, stick around, let's make some money. Alright, so moving on to the technical analysis for Churchill Capital, ticker CCIV. Just look at the historical perspective. You could see that ever since last year in Q3, Q4, we're trading around like the $9.70. And with respect to this level, this is basically, most spec or special purpose acquisition vehicle type of stocks typically trade or begin around these level, right? And ever since then, we got a lot of great media affectation coverage with respect to this stock. With a lot of media coverage, especially from CNBC, having the Lucid Motor CEO being on TV, basically every bi-weekly perspective, and also with respect to the Saudi prince, proposing interest of potentially investing 1.7 billion or close to 3 billion into Lucid Motor as a potential majority investor into this company, which subsequently drove up this stock, significantly, right, from the $10 level all the way to the $64 level, right? And this is also a combination of both the Q3, Q4 boom that we have across the EV sector, right, with respect to Tesla being, gaining market acceptance with respect to the S&P 500 inclusion, also with respect to just the stock split that also incur last year, right, earlier for Tesla, and also with respect to just the whole U.S. Green energy administrative proposal that we got from Biden, right, and also with respect to China having that proposal of the 2030 transition across for the EV sector, right, transitioning all the vehicles from the antiquated, gas and petroleum type of chemicals to the electric vehicles going forward, right? Which is the rise of NIO, Xpeng, and Li Auto from there, right? And all of those positive catalysts subsequently dragged the stock up to the $64 mark, right? However, the stock was so, the trend was, pretty much forming according to the alignment of the logics, from basically the beginning around like January all the way to the February 10th. However, the logic start to basically shift an outlier starting in the beginning of February, and that shift up all the way to the $64 mark. And this mark and was basically forming such a natural course of cadence that subsequently whatever goes up really fast comes down really fast. That's exactly what happened, right? We come up really fast and we form this huge gap to basically correlate with this major green candle that we've had, and that was basically a pump by a large corporation and subsequently a huge dump. And I feel sorry for a lot of people that actually bought at the peak around like the $57-$60 mark right there. And whatever comes down really fast goes up really fast, comes down really fast. And ever since that, we've been kind of just consolidated sideways right now, pending on the merger agreement, pending on more about the production of CCIV vehicles, obviously the Lucid Motor vehicles, and also contingent on the chip shortage notifications that we'll be getting as the economy start to open back up again. So what are the resistance levels we should be looking out for right now, right? I think currently, because of the fact that we've been kind of dead in the water for quite some time now, we've been kind of testing around like the $20 level, the $1975 level for quite some time now, right? You could see that based on the historical resistance level. We've tested this once. I'm just going to shift this bar up a little bit so we can see this a little bit better. Like you can see that we tested this level a bunch of times, right? We tested this once back in the day, in March. We also tested this several times here before the big pump up. around like January time period, right? And also we tested a bunch of times in recent days, right? And May 7th, um, and May 10th, and subsequent to that, we've just been kind of trading sideways, right? So the reason that we're trading sideways is because market is still, or investors are still pending on the news on a macro perspective with respect to chip shortage and the productions, right? But on a micro perspective with respect to the merger agreements that Churchill Capital, which is a financial institution, merging or acquiring Lucid Motor and having that finished and officially sealed as an agreement legally and binding agreements, right? So right now we're still pending the news, and I believe the news is actually percolating in the coming weeks or months. So right now I think would be a perfect time for us to buy in right now. Just look at them on the MACD perspective, you could see that it's basically flat with very small, spiral consolidation at the moment. RSI is definitely highly oversold because we have highly oversold. And with respect to this, basically pending momentum that we're seeing so far, what I see going forward, knowing the fact that the line has, kind of crossed upward so far, I do see some more of a bearish pressure going forward because people can get a little bit impatient. And also on top of that, with respect to the CPI report that we'll be getting in the next 20 days from here, we might see some green movement, but I think the likelihood of like going back down to around like the 1850, which is a strong like psychological resistance level to have formed a couple of times, and I could just ship that down here a little bit. You can see that we've tested this like 1, 2, 3, 4, 5, 6, 7 multiple times, right? So that's definitely a very strong resistance level that would form. So I think the spiral is going to come down a little bit more and then going to go back up again. But if you were to further dollar cost average or start building your position from here, I think this is a fair number to buy into. But just know that I do foresee a little bit more of a minimal sell off from here, more downward pressure coming from here. Obviously, contingent on more news coverage, or more activity or developments that we learn from the management team as a whole, right? But based on how it's trending, I think the business is still operating according to cadence. I think the chip shortage is still a problem that they need to fix, but we will hear more of a major catalyst going forward that will subsequently propel the stock upward from here. So right now, you want to buy in before the calm of the storm, because the storm is coming, and I think the storm is gonna be relatively positive, right? I think people have just been waiting, and the pressure is percolating, and we are already submerged in the water. That eventually we're gonna form a relatively sizable pressure because of the patience and the internal pressurization of just the anticipation, that will subsequently create this sort of like euphoric pump because people just been waiting on it, and we hyped it up so much already. So based on historical trends, to make a predictions on future projection, I think the pump will be relatively massive going forward. So buying at these levels wouldn't be bad, right? So again, first level, current level, 1975. Second level will be the 1850, and the third level will be the bottom right here, the 1725, which is truly the bottom that I see. Contingent on obviously no fraudulent news from the CEO or about the management team or the company as a whole, and contingent on no more negative media affectation pressure, which oftentimes you have to really take it as a grain of salt, because media affectations is oftentimes manipulative. Coming from the institutional investors, try to basically trigger the market to have a certain influence on people's buying activities or behavior, right? So definitely not something you want to completely follow, just based on what the news says. But overall, I think definitely a very bullish setup that I see in front of us. So if I was you, I'll start buying in, and I'm actually personally investing in CCIV quite heavily around these levels, especially. All right, so just to recap on all the numbers that we just talked about with respect to CCIV, Churchill Capital, or Lucid Motor. Again, right, current level at the $19.75 to $19.50 level, that's a fair price for you to get in, knowing the fact that we're just basically waiting and pending on good news, which I think the likelihood of like getting good news or getting a positive catalyst will be more like a 75%, in terms of like the 25% of a downside perspective. And if we get down even more, which I think we will get down a little bit more based on just how the chart is set up right now on the RSI perspective and also on the MACD perspective, that the 1850 would be a fair level for you to get in. That's a really attractive level. And the fact that we tested that historically about 7 times so far. And if we even get down even more, right? The steel level will be like the 1650, which we saw that crash that happened a while back. We actually hit all the way to the 1625. But the likelihood of us getting there, that was again, right, that was a stretch to the logics and the supply and demand dynamics of the chart and how the dynamic is set up. So for us to get down to like the 1650, that will be just like a black swan events that will occur. And if we get there, I think loading up would be an optimal solutions for us. And with respect to the price target for year in 2021, based on historical pump that we saw, this is not a surprise to us. It happened within the span of basically a month, right? Ever since when it was like $9.50, it pumped up all the way to the top. To get to 55, that's a conservative level, right? Contingent obviously on the macroeconomic dynamics we'll be seeing going forward. Generating, buying it now like 182%, close to 3 times your money would be an enormous gain, so and I think the setup right now is very logical, and I feel very fairly comfortable putting my money into this company based on how it's set up right now. Alright, so that's it for today with respect to my technical analysis update on CCIV Churchill Capital. Again, overall, I built definitely a very bullish stock that I'm investing in, and I'm actually investing quite heavily with respect to my portfolio at the moment. So hopefully the insight and the analysis is helpful on giving you more of a clarity and also a peace of mind. This is not dead at the moment. It's just that we're pending on a positive catalyst that's coming, and based on the chart setup right now, I do confirm and I do see that happening going forward. Hopefully you find this helpful, and please hit the like button, the subscribe button, also the bell notification to watch out for the next video. Really appreciate it. Take care. Bye.